Greetings, everybody. This is Jeff Scott. It is just turned out west, or about to turn, Sunday, December 2nd. I'm in San Diego at the American Society of Hematology. I didn't plan on doing a video this weekend, but it was a pretty impressive week, so I thought I'd do a short one. Is this a bull trap or is it time for new highs? I'm hoping it's the latter, but we have a lot of overhead supply and there's still a lot of volatility. So it's going to be Santa Claus versus the bad things, and we'll see where we end up. hgsidoc@gmail.com is my email address. This is for educational purposes only. Anything I recommend is for education on investment advice. I'm a doctor, not a broker. I'm independent, and trading involves risk, and you alone are solely responsible for any investment decisions you make. I just did my educational event in Palm Beach. I was humbled to have attendees from Oslo, Copenhagen, Shanghai, London, among many of the U.S. states. It was quite, as I said, humbling to see people coming from far and wide to listen to me talk. I've been doing this obviously for a long time. I've learned from very important people, and I always entitle my training "Be Your Own Guru." This volume is low. I'm doing it at midnight in a hotel room, so I can't speak loud. I don't have any microphones. I started with Can Slim, improved by Woodward and Brown, taken to the next level by Morales and Catcher. John Person took me from a list of stocks to how to trade them and how to make money, and then just others that I learned from Van Tharp, position size money management, Cigar with superior profit, great indicators, and some tools, and then George Lee. I have a lot of programs, and we're going to use TradeStation, Thinkorswim tonight, and HGSI, and some EdgeRaider screens. I use a lot of different tools. These are the tools that are necessary. Here's the website for HGSI. It is a free 60-day or 30-day trial, no credit card, plus under investing strategies are plenty of videos that I've done to provide support. I do not get a commission, a spiff, or anything if you buy it. I'm hoping you buy it because it'll be good for your trading. Stock patterns are cyclical. We are clearly have been in a period of downtrend over the last month or so. And then we saw a spike up this week. Is this real? Is this the beginning of a new run? Was this just a shallow, or not shallow, but a deep correction in a bullish market? Or are we still going to go further down? I think it remains to be seen. I have been taking a cautious approach, buying puts and selling calls. I still have long positions. I just had about half of my normal direction to the long. Last week was a week to cover the shorts. But the question is, where are we going to go this week? Are we out of the woods? Is it all better? How will the market digest what just happened with China and the U.S. at the G20? What do we do now? We knew rates dropped again, getting down towards that critical level where when we get below this white line on the 10 and the 30 years, the impact on the market seems to lessen. We know from the spread of the 2 and 10 that the pink here is flatline or flattening, and we have a leg down towards that, but we're not flat at this point. The AD lines and the S&P turned up on the small stocks on the left, the large stocks on the right. And if you look here, the NYSE AD line, it turned up, but it's interesting how fast the markets rebounded, perhaps at a greater rate than the AD line changed. Does that mean this is not a fully broad-based rally? I don't know, perhaps. Breadth improved, number of stocks above the 200 and above the 40-day moving averages, but still not in bullish territory. 3-month new high, new low also rebounded off the bottom, not in an extended territory. The daily McClellan, we now have the oscillators crossed above zero. The summation index on the daily is heading up. We're being challenged here by the 50 and 200-day moving average, which would be a natural place to see resistance. And on the weekly, no signal either. The bucket showed that we've gone from a very oversold to 2/3 of the stocks are above the midline, and there are very few oversold stocks. So we've clearly become a more bullish tone to the market. There have not been a Hindenburg since October. That's not a shocker. We won't see HINDYs again until we get to new highs. In 2007, as an aside, we had a sharp correction, and then the market recovered, and then we had the big black swan. So I'm still going to be careful and looking for those, even though we haven't seen one in quite some time. Market tone with a series of kahunas across all the major markets on Wednesday, the day of my seminar, pretty much turned to a bullish posture. Sectors except for materials and staples have also become bullish. There's no bearish sectors. Canaries in the coal mine, the big FANG stocks plus turned up, still have to get above a lot of overhead resistance, with including a death cross. Know your news and earnings. There's a number of Fed head speaks this week, including Jerome Powell on Wednesday, although his dovish tone certainly turned this market around this week. We have employment numbers, which are also important on Friday. So anytime you have employment numbers in a Fed head, it's got to be a very significant week of news. On the right-hand side, we're slowing down some on earnings, but there's still some big players here. There's Cons, there's Toll Brothers, there's Restoration Hardware, Momo, Signet Jewelers, Ulta Salon, which I have positioned, so I'll have to decide what to do, Big Lots, etc. As I say here, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your earnings dates are. So let's take a look at the market real quick. And well, I'll start with my thoughts, and then I'll go look at the market. Huge broad-based rally allows November to go out on a high note. How broad-based? Here are a number of groups that I follow. And the key to me is, these are from Friday the 23rd to Friday the 30th. The S&P 500 was up 4.85% in a single week. That's as big as it gets. My holdings were up even greater on the IBD 50. And just an idea of how strange this week was, I picked stocks to short if the market went down. I thought the market would bounce last week, and that was correct. But even the stocks that I thought were potential shorts did well. And I think this was just a broad-based rally, especially in growth, with the IBD 50 outperforming the S&P. Powell appears to become dovish, stimulating the markets. Santa rallies in place, at least for a week. China versus Trump. Tonight they announced sort of a delay in the next round of tariffs to allow time for them to negotiate, which has got to be good. Keep in mind, what matters to the market is it good enough? And I don't know that. It depends what they were pricing in. Is this correction over? Or are we just bouncing off the low? To be determined. I'm still cautious, but I've expanded my bullish stance. And again, thanks to those live and online for my live meeting this past Wednesday. So down into Thinkorswim. If I look quickly at the markets in Thinkorswim, that's not where I want it to go. Open this up. You see a lot of green, just which tells you the bullish tone. This was a big week in the market, a very bullish week. Come on. So here is the E-minis. The highs were set in September. We are up at resistance, okay? We have half above and half below. This is resistance. We got the 200-day moving average and the 50 right ahead of us. This should, to me, cause a little bit of backing and filling before we break above. I'm going to be watching that closely. NASDAQ has a little ways to go, and hopefully it'll get up there and will increase and avoid a death cross, which is imminent there. So it's not quite to resistance, but it's getting close. The Dow has broken through the 200 and the 17, has traded up to the 50, probably the most bullish appearing of all of these. And then the Russell 2000 also, looking good, but way down in its pattern, has to get above the 50 and the 200 as well. The VIX came down with the improvement in the markets, has dropped below the 17 and the 50, still above the 200, and at 17, much above where it's been during the quiet periods. And then the dollar this week saw further strength, closing the week at $97.20. If I flip to the weeklies very quickly, and yes, I'm going fast, I need to go to sleep, and I wanted to get this done before a busy day tomorrow and travel tomorrow. Just looking briefly, you could see on the weeklies a lot of potential resistance to 50 weekly on the E-minis, the NASDAQs. Here's the Dow looking stronger. the Russell further down in the pattern, sideways on the VIX, and the dollar has come off of its highs, but it's, looking back over the last year or so, it's in the middle of its range. Let's open up Hgsi and go into the market analysis groups, and let's look at Major Markets Plus, hit the warehouse view, and put top-down view on. And you can see when I rank by combo the 24 groups that the Dow Jones Transports, Utilities, Industrial Average are on top. The mid caps, the small caps, everything doing well. What wasn't working were commodities, oil, gas, volatility, silver, gold, treasuries. That is a picture of a strong market. Let's take a look at some of them. The S&P 500. Now, the most important thing on this chart is going to be this green thing here. There was a eureka, and that eureka occurred whether I was using the NYSE or the NASDAQ. Eureka in Hgsi land is our follow-through day, and that's a signal that it might be time to get more bullish. So we had our follow-through day at Kahuna. Here's the S&P 500. So the question I have and my concerns and why I'm not super bullish yet, I could become so quickly, is this. Overall, are we not just in a very wide trading range? And if we're in this trading range, are we bearish up here, bullish down here, and are we getting to the point where we're going to become under more pressure from the market? That's what I think is going on. It would be great to see us break through the 200-day moving average on our first attempt and then break through the 50 and go out to new highs. I just worry about the overhead supply in here and that we're going to struggle. That's the S&P 500. Now, they may take the China news so positive that we blow right through and start to look at something like the Dow, which blew through the 200 and the 17, and with any kind of a positive open on Monday, we'll blow through the 50. The NASDAQ, also very strong over the last several days, still has some work to do. It's still in the lower half of its trading range. And then the Russell, like the NASDAQ, still has some work to do. Just for completeness sake, look at the dollar. You can see a dollar that has been strong since the bottom in April. Volatility should be down based upon what we've seen, and it's down. And then with that strong dollar and perhaps easing of some of the tension in the market, gold and silver are probably going to be flat to down. There's gold still in the penalty box as well as silver, although gold does look stronger. If I go back into the major market industry, the market analyst groups rather, and open up number 7, I can see that I have 174 groups, and on short-term 2-day momentum, I've got 63 versus momentum down, I have 22. That is a decidedly bullish market. Saying that, look at what's not bullish. Telecom carriers, energy, food and drug stores, entertainment, consumer electronics, renewable energy. Some of these are somewhat defensive plays like tobacco. So it's a risk on market back in fuego. Semiconductors was the top group. And, I looked at these and I love to find one I want to buy. So let's take a look at them, especially if these are the strongest group in the market. Again, the Eureka is on, this case is the NASDAQ, on the last chart was the NYSE, shows that market strength is coming back in. This is NVIDIA, way down in the pattern, a lot of work to do to recover, not for Intel, maybe shallow bottom, break above the 200 and stay there. Global breakup from a squeeze, pocket pivot in Kahuna, that looks interesting. Ambarella, good earnings, but to me, it's going to have resistance at the 200. Maxim, all below the 200-day moving average, all of which is relatively unattractive to me. Analog devices is another one that's about to take out its 200. So semiconductors are strong, but most of these stocks are deep in their patterns. Application software, driven by great earnings by Workaday and Salesforce.com. A lot of these things that today are probably too far gone and not something I'm going to run out and buy. So here's workaday with the Bible gap up. Potentially you could play that with Bible gap up rules in play from Morales and Catcher. Uptrend, pullback, breakout on the weekly. That looks pretty good. That's workaday. CRL also looks similar. Took out its 50. Lots of momentum. That's one at a good buy point, perhaps an expense stock. Similar with Adobe and Intuit. Twilio, a leader, getting close to breaking out to new highs, doesn't have great fundamentals. So there is something to like. Here's a lower risk at the 200 and the 50 with a big tall bar with a global breakout, pocket pivot, huge volume. That is Synopsys. So consistent with being a new leader, applications look good. E-commerce and discretionary, it's all about Amazon. Continues to be a substantial holding of mine. I eased off my short position as it had a rapid move this week, but this is kind of like the market. I mean, we got to get above that 200. We had a PSAR reversal, which is a big deal, or about to have a reversal. But the problem really comes down to the same thing. There's a lot of overhead supply in here. And am I going to come in there and go to new highs right away? I wish, because I have a big position in it. I don't think so. So I left some of my protection on, and I'll be watching what happens with this market. So that's Amazon. I'm concerned about overhead supply, and we're getting into a more difficult area. Alibaba looks a little bit better. Multiple pocket pivots, mobile breakout from a squeeze, has broken through a descending trend line. Netflix, this actually made my short list too. Not sure I'd be chasing it right now to the long side. Wayfair, deep in its pattern, though it broke above the 200. eBay, nah. Hgsi is interesting. Here's about the first stock I've shown you today that's broke out to a new high on Friday. I like Hgsi a lot. I have a position there for all full disclosure. So I'm not just pumping my book. You know it's my book. Infrastructure software. Splunk also, I believe, had good earnings earlier in the week. And you could see a breakout above the 200, a couple kahunas, pocket pivot, Bible gap up. Not great fundamentals beyond the next quarter, but a growing company and one that's potentially at a good buy point. Microsoft, now the most expensive company by market cap, breaking above the 50 in a squeeze. VMware, another all-time high, Bible gap up. That looks interesting. The market has clearly changed. ServiceNow, like many of the stocks I saw, breaking back above resistance and getting to a good buy point. So I'm tired. I'm only going to go through one more group to the long side, then look at my stock picks. These are some of the large pharmas. I really like AbbVie here. These guys are moving, and you could see a pocket pivot, kahuna, mobile breakout, everything's green above. The only problem with this stock is it's below the 200, pays a nice dividend. It's got earnings per share growth. I'm a fan of AbbVie. Pfizer, boring old Pfizer, breaking out to new highs here. Sort of a cup without a handle. Multiple kahunas, pays a 3% dividend. Merck & Company, new highs, leader. Bristol Myers Squibb, deep in the pattern, they had some earnings issues. So lots to like in healthcare. So bottom line is there are a lot of things moving right now. In the essence of time, and because I only want to do a short video this week, let's take a quick look at my buy watch list so you can see the things that I will be looking at. There are a lot here. That might be a sign of a bullish market that's about to erupt. I found a lot of stocks that made my favorite criteria. Where do I have a bunch? I have a bunch of banks and biotech, application software, REITs, few semiconductors. Let me show you a couple of the things that I like with the REITs. A lot of stocks that have been beaten up, breaking above their moving averages. There's nothing for resistance directly above this chart. There's no moving averages, etc. We had a kahuna, pocket pivot in a squeeze. Great earnings per share growth. This is Brixmor, pays a 6.7% dividend. And by the way, that's a high close doji. Camden Property Trust, flat, breaking out, sort of a shallow cup and handle, perhaps mobile breakout from a squeeze, pays a 3.2% dividend. Crown Castle, 3.7%. HCP, I've pointed this out weeks ago, 5.1%. Healthcare Trust, 4.4%. And then you have these Independence Realty Trust, great earnings per share growth, 5.9% dividend at a good buy point. So I saw a lot to like in the REITs. Coming up here and see if there's anything I want to look at with you. Deere, Caterpillar, Optech, Cummings, all looked interesting. Deere was probably the best of the bunch, and you could see breaking above its 200-day moving average with some kahunas, pocket pivots. Perhaps this China thaw is going to make a big difference to this class, this type of a company. Looked at REITs, semiconductor devices, the ones I liked. Take a look at Broadcom. Perfect, but certainly a stock that looks at a point where it's trying to break above the 200. I might set a buy stop above the PSAR. Monolithic Power has broken above the 200 with lots of impulse indicators. Hgsi in technology about to break above. So I found some that look good. I had the P's that I liked a lot. The P's would be Paychex, breaking above the 50 with a pocket pivot. It would be, where are my other P's? P. Okay. Paycom, about to break above the 50. And there's one more, Pet City, I think, and a bunch of P's. Paylocity. So a number of stocks sitting, look at all the kahunas forming as this stock is basing. So I found a lot of stocks with favorable chart patterns. And you can see the breakdown there. Now on the short side, it was tough to find good candidates. And I'm definitely not going to look at it that way. So these are some that I found, at least in the John Person work. This looked like one that was very ripe for shorting. Let's see if it comes up. It's had a breakdown. I like to see a breakdown below the 50. This is Aero Environment, but just work through AutoZone, big run up, getting tired, pocket pivot to the downside. A mobile breakdown, pocket pivot to the downside. Be careful with the strong market. Netflix, I mentioned, is going to short. Laboratory Corporation America broke down on Friday. Palo Alto Networks failed right below the 50. Willis Towers at a decent point, but showing some weakness, especially on the weekly chart. Royal Dell, CACI, this one's probably the best point right now, just breaking down below the 200. And then gold being weak. So I did find some things that looked interesting to short, as Papa John Pizza, breaking down below the 200. And lastly, Hasbro, breaking down below the 200. So in summary, there are a lot of really strong looking stocks. Let me put my buy list here so you can take a picture or whatever you want to do with it. I found a lot of interesting things that I will be chasing after this week. I haven't seen 73 buys at the same time in ages. Now, it also could be a sign of exuberance and a top. But right now, I'm going to position myself to the long side. Still be careful, especially with my Amazon position. I hope you have a great rest of the weekend. Trade safe. Thanks again for those venturing into Palm Beach, and thanks to those who helped sponsor the event by doing it online. Goodbye, everybody.